Hello and welcome to Pro Trader Strategies Market Commentary for Monday, October the 8th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that I talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation is because I don't know your risk parameters and I don't know what's in your portfolios. Also, please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. It's a bank holiday here in the United States and in Canada, so we should see lighter than expected or lighter than normal volume. It is Columbus Day, so banks close. That usually lightens up on volumes across the board in the equities. So that being said, let's get on with the overall markets. Crude oil trying to make its way back into the 75 handle. We did settle below that 78 Fibonacci on Friday, which is what I've been talking about as being key to my thought process of this rolling back down closer to the into the 60 handle. Today's market move is making it looks like it's trying to fight its way back up. Now, that being said, we should get some crude oil inventory numbers on Friday. Let me just double check. I don't see them right off the top of my head, but would expect we get some crude oil inventory numbers this week. Anyway, I might be looking at the wrong days because I'm trying to scan through here real quick. That being said, crude oil looking pretty strong today, as it could be a bit of a flight to safety. Most of the equities are down pretty big. NASDAQ fighting its way back right now, but we'll get to that here in a second. Gold futures back below that 1200 psychological level, just falling out a bit. No effort whatsoever to really defend that 1200 today. It looks like gold might start really rolling over now. All right, Bitcoin, again, nothing to see here, right around that 6,500 area, point of control, no volume, not a whole lot of interest. All right, bonds coming off again as equities or as the Fed is expected to continue to increase interest rates with the pretty decent economic data we've seen. We've seen good economic data, okay? It is all expansion in the economy, but it's not robust to a point of where we've seen like a few months ago. So I would say we've seen a peak, at least for right now, in economic activity. We're starting to see a little bit of a rollover into a lull, if you will. It's still expansion, but it just feels like it's not as aggressive as we were once seeing a few months ago. So that being said, I think that that's also part of the reason why the Fed can't continue to increase interest rates. Doesn't mean that they won't overdo it, but they should take a pause, I believe. All right, VIX spiking, as you can see, trying to get up into the 18 handle. We haven't seen 17 since July for the most part, June even. So good for strategies that we can trade off of, especially on premium selling. We are coming closer to the earnings season, but that's still going to give us opportunity, especially in like ETFs and things of that nature. All right, right now, Dow Jones near the lows of its day, down 170 points. If it were to finish here, it's not looking good. It's definitely looking like the 38 Fibonacci extension is next in line, at least the 50-day moving average. Now, the NASDAQ is down quite big, off about 120 points right now. I thought it was looking like a minute ago. I must have been looking at the wrong chart, but slamming down, and that's why we're seeing the bonds and gold. We would expect, anyway, those flight to safety type of markets really start to spike today as people are pulling out of equities, but it must be parking this money in cash because we're not really seeing that kind of rotation like we normally do. All right, E-mini S&P is down over about 25 points below that 61 Fibonacci extension, peeling right through the 50-day moving average. This is not looking good for any of the equities across the board. Unless we were able to get back almost to unchanged, this is looking very bearish as of right now. Light volume late in the day. We could see that rally happening because it is a holiday. There's not going to be a whole lot of resistance in either direction. It's going to be when the market makes that move, it's going to be probably a quick one. This is the E-mini S&Ps daily chart. Each one of these blue sections is a daily chart, 30-minute candles. And as you can see, the lows of the day being printed right now. No effort whatsoever really to stop this free fall from happening. And that's because we aren't seeing a whole lot of volume here. So that is just not going to slow down anytime soon. And when it does, we could easily see that snap back to the upside. All right, having said all of that, things that I have done. eBay on Friday, if you guys remember, I did this for earnings, last earnings season. With eBay, I sold some 36 puts in there, and obviously on that earnings move, I took the stock into my account and started selling calls against it. So I am long eBay at 36, but then I started going in and selling calls. I sold the 36 calls. Next month, rolled them out to the 30, or rolled them out in time and down to the 35s. I rolled them out yet again to the 35s, collected another 60 some cents, and then just now rolled those 35 calls out in time to the November 34 calls. And all in all, out of all these collections of covered calls, I've collected a total of $2 and about 73 cents. So that, when that comes back up, I'm still going to have a profitable trade because I've collected so much credit. I collected over $2 for this down move. So it's looking good so far. That would be nice to have that come up, but that's how we stay mechanical with these. I'm rolling it out and down in time, collecting more credit. I mean, I started out 36s, started rolling those out. Now I'm down to the 34s and still at a break even there, right? So that's what I'm trying to do, staying mechanical, nice move higher. And eBay would be great, like it's trying to do today, is what I'm looking for. And then finally with TLT as the trade that I put on, you know, I just think that this bond move is overdone to the downside. I've been looking for an opportunity to get in here. So I thought with this extremely high implied volatility for TLT, as you can see, rarely does it get up this high. It's up into the 50 ID%. And that's only because of this one. It would probably be closer to 100%. I decided to go in there and sell the November 108 puts in there for 42 cents. Okay. You know, I've got a nice break even well below the three. This is the 3-year low, to be quite honest, just so you guys know. I don't think it's going to go much further than this. It may roll over a little bit further, but you guys, it just can't go that far. I don't think that quickly. All right. Like to see a pop higher, some volatility coming out of this, and we'll be on our way. All right, check out Pro Trader Strategies. Get signed up for my webinars. I'm going through how to set these strategies up with high implied volatility or low implied volatility. What strategy do you need? You aren't going to find out those key details online. Yes, you can find out how to do the strategy I'm talking about, but they aren't going to go into the nitty-gritty of why you need to set up these strategies in the environment and the location or strike location that I talk about. So go to this Pro Trader Strategies, sign up for these webinars, and give me some feedback. Thumbs up, thumbs down on this video or the webinars. If you give me a thumbs down, though, let me know what the heck is irking you about those type of feelings to give me a thumbs down. All right. Anyway, that's about it. Other than if you can't take that, take it easy.